I'm sorry. I was talking, and I didn't realize I had it muted, and I'm really, really sorry about that. Um, Let me just bring up the slide again and just read the disclaimer really, really quickly. That all signals and trading opportunities provided both orally, written, and electronically that are disclosed to visitors or subscribers or for educational demonstration purposes only. Right Line takes no responsibility for any losses incurred within the futures, forex, or stock markets. Participating in trading in the futures, forex, and stock markets involves substantial risk, and it should be understood that a person can lose a substantial amount of money. Carefully consider your financial position before taking a trade. Never risk more than 2% of your account on any trade. Do your own due diligence. And nobody here at Right Line Trading is a registered financial advisor and not a licensed commodities trading advisor. I already read it once, but I'm reading it again. Now, what I was talking about was trading the Forex and how it's impossible to create a quote Forex engine and trade this on an automated basis. The reason you just can't do that is because of the pip spread. I mean, in some markets, it's 1 pip, other markets, it's 3 or 4 pips. You can only optimize for either the bid or the ask. You cannot optimize for price. And if you cannot optimize for price like you can on futures, then you really can't mathematically optimize for the system at all. This must be traded on a discretionary basis. If you ever see an automated system for Forex, it's going to have a lot of it's mathematically known as hysteresis, and hysteresis is what kills you in a system. I mean, in physics, hysteresis uh, is a little bit of a different term. In an automated trading system, it's the play in the system, and the play in the system has to be extremely tight. Now, for stock, you can automate stocks because if you look, the difference between the bid and the ask may be a cent or two on a $100 stock, but 2 or 3 pips on a trade is a significant amount of money. And that kind of hysteresis or play in the system that needs to be given on an automated forex trader is impossible to allow it to trade profitably on an automated basis. This is the kind of system that has to be traded on a discretionary basis. But I believe with the right education and the right tools, you can trade it profitably. Now, I know a lot of you have listened to me talk before, and you know the system pretty well, but I'm sure there's a lot of you out there who don't. And what I want to do is I'm just going to quickly, there's not going to be a detailed webinar about what the indicators mean, but I want you to see what they represent. Now, on futures, I really like Unarenko, but Unarenko is just not effective on the Forex markets. And one of the reasons is the fact that we really need to get a 25 pip winner in order to make any significant difference. And a Unarenko chart, unless we go to a very high Unarenko time frame or a Unarenko setting, like a 16, 18, or 20 Unarenko, it's not going to really get us very much profit on the forex markets. And looking at all the time frames, I like the 5 minute, and you're going to see that you get some really wonderful 5 minute trades. And the thing that is really important about the system is that you're rarely going to take a loser. The system is very specific, and if you follow the trading rules and trade only in the areas where the likelihood of getting a winner is the highest, you're going to garner a lot of nice trades. Now, as one of the things that we're going to give you, I don't think I have one here, is our trade analyzer. And I'll bring one up towards the end of the webinar. And it's going to allow you to look at 12, 13, 14 markets at the same time. And it's going to signal when there's a likely area, approaching that's going to give you a likely winning trade. So you don't have to watch a market where there's no background here, which is a period of time when we don't trade. So what I'm going to do first, and again, this is going to be redundant for some people, but I believe it is worth going over, is look at what I consider to be the most important, I call them independent variables, present on the chart that create an environment in which we're most likely to get a winner. And the most important one, by far and away, and remember, there is a mathematical formula that relates the fact that all independent variables are not equal in power. Even though they may be independently related to your ability to get a winner, they all don't have the same power. The one that is the most powerful by far is the background color. When you have a multi-time frame alignment in trend, you're most likely to get a winner. Now, the background bias does not look at the 5 minute. It looks at the 15 minute and the 45 minute. And when the 15 and 45 minute have a green 50, a green 15, prices above both, they look at market structure as well as trend, you're going to get green background. And the key to this being an independent variable is it has nothing to do with price on your trading chart. 99.99% of all the background biases you see out there just tell you what's going on in your trading chart. And who cares? It doesn't provide you with any beneficial information. We already know where price is going on our trading chart. We've got an uptrend on our trading chart. And the only direction we're going to trade off our trading chart is long. But do we also have an uptrend on our 2 higher time frames? Because if our 2 higher time frames are in a downtrend, it's going to be very treacherous to take a long trade on our trading chart. So what we want is a multi-time frame alignment in trend. And that's what the green background tells us. Now, the green background is by far and away the most powerful predictor of price movement off the right edge of the chart. Now, there are 3 up colors. There's green, there's blue, and there's cyan. And in this webinar is not the appropriate place to really go into what each of them represent, except for me to say that the strongest up color and the one you really want to take the majority of your trades off of is when background bias is green. And if we look through this, this is a 5 minute of the Aussie yen. I can dial in any Forex pair here because we've automated the system really nicely. It's very configurable. And if I go to Forex and I pick another pair, like the pound dollar, it's calculated. You can see that when the background is green or pink, see this move? Off green background. This move, green background. Now, it's not the only thing you need, but it's the most powerful single predictor of price movement of all the other indicators that do their analysis off of other time frames. So this is the king. And if you trade, even this small area here, which is really a trade entry, is going to give you a small winner. And the key is you just want to avoid a loser. Not every trade is going to be a 50 pip trade. Sometimes you're going to get a 5 pip or a 6 pip trade. What you don't want to do is take a loser. And if you trade, look at this green background. I mean, if you got into this trade early, and I'm not going to go into our trading rules either because it's a little bit too complicated, and that's a lot of education. But if I go to the ruler and we pick an entry right here, we go all the way. Now you're not going to get the full excursion, but this is 43 pips. That's a really, really nice move. And because you've got 3 time frames aligned to the upside, the likelihood of taking a loser here is exceedingly low. So that's what you're looking for. You're looking for very low risk, potentially high reward areas to trade where the likelihood of taking a loser is extremely low. That multi-time frame alignment is really the king indicator here. Although we've got a couple of queens and we've got a couple of bishops and rooks. Now, this is just a 50 SMA. No, I take it back. This is a 50 exponential, and this is a 15 exponential. And these are special exponentials. They don't move like regular exponentials do. They're more stable, yet they have the same kind of speed. So the second most important parameter that you look for to take a trade is this line right here. Now these are now the nice thing about the Forex markets are the correlative markets, or the markets that rise and fall when the pound dollar rises and falls. Those correlative markets are very tightly correlated. The correlation coefficient here is extremely tight. And what you want to do is you not only want to trade in the direction of the multi-time frame trend, but you also want to trade in the direction of the three markets that correlate in direction with the pound dollar. So that if all three of them are going up at the same time, and you know they correlate in direction, 80 to 90% of the time, that provides you with a tremendous amount of useful information. So what this green line does is telling you that there's a multi-time frame alignment and trend on three markets that almost always rise when the pound dollar rises. So this is looking at three other Forex pairs. So the platform is doing a very complex analysis, but it's projecting it in a way that's fairly simple. So this is called a quant line. And the reason we call it a quant line is because each market is quantitatively weighted in the line based upon how tightly they correlate. If we get a market that correlates 0.95, it's going to be weighted very high. If we get a market that correlates at 0.75, we're going to weight it low. It must correlate 0.7 or greater, or mathematically, by definition, there is no correlation. Now, I mean, an easy analogy is if we trade the NASDAQ, we want to know what the multi-time frame direction is of the Russell, Dow, and E-mini. And if we trade the NASDAQ long, when the Russell, the Dow, and the E-mini are moving long on a multi-time frame basis, it's much more likely we're going to get a successful trade on the NASDAQ. It's the same thing here. So when you've got green background, and so we're looking for multi-time frame alignments on the market we're trading, and we're looking for a multi-time frame alignment on three additional correlative markets. Now those markets I can't tell you because it's taken us an enormous amount of time to get the tightest correlative markets. But it wasn't as much work as it was for futures, because currencies tend to really have strong correlations. Like a lot of the dollar crosses and a lot of the pound crosses are essentially going to move in the same direction as the pound dollar. So getting those correlative markets wasn't like as big a difficulty it was to finding correlative markets on crude oil or on heating oil, which we don't trade, or gold, which some of our traders do trade, and actually traded real. From the feedback I'm getting, you're trading it really, really successfully. So those are the two most important things we look for. And what they are independent variables. And what makes them independent is that they don't look at price on your trading chart. If an indicator requires price on your trading chart to do its analysis, it becomes a dependent variable. And a dependent variable has no predictive value because it's driven by price. If price goes up, the indicator is going to go up. If price falls, the indicator is going to fall. So what value is that on the right edge to tell you where this next candle is going to go? It has zero value. The only thing that has value is something that's been split off from price on your trading chart and provides you with information that is very, very good in predicting how price is going to move off the right edge. And that's what background bias, and that's what the quants do. Here's a multi-time frame alignment of the market you're trading. Here's the multi-time frame direction of 3 other correlative markets. Now, the next thing that we look at, which is also exceedingly important, is momentum. Now, there's a lot of ways to calculate momentum. You can use a number of different oscillators. You can use stochastic, you can use RSI, you can use Williams %K, you can use the ADR, the ADX, and you can use the MACD. You can use a ton of systems that do. Except if you look at their formula, these stochastic indicators are not created as trend following tools. They're created to find divergence and provide you with a divergent signal. Now, I'm not going to project a slide where I compare all the different oscillators. I have one. It's buried in this in the formal webinar I have, and I didn't want to go through that because I think it would be very boring for a lot of traders. A lot of traders have seen it, and you know, it would have taken me 25 minutes just to talk to you about the quant line, and a long time to talk to you about background bias. And I really want to get right to the nitty gritty, hone right in on the chart, and then let's look at some markets. So the only oscillator that is now, to regress for a second, in my opinion, I do not believe that, although still there's a lot of traders that love divergent signals, I believe that divergent signals are a pathway to doom. I mean, divergent signals have been around for over 50 years, and they have not been making anybody money for half a century. So if you want to follow in the path of about 100 million day traders and swing traders who have gone broke trading divergence, you're welcome to do that. But that signal gets run over far too many times. And the reason it's becoming less and less powerful is because institutional money is now running the markets. You know, big banks and big institutions come in and they decide they're going to push the pound dollar. And that pound dollar can be overbought or oversold for days, for minutes, days, weeks, or months. So if you try to counter trend trade it on a divergent signal, you're going to get run over. And you can see in this move up, all these traders in these down candles. Now, clearly the trend is up. Why are they trading this market short? It's because they're trading, obviously, a different time frame, a different set of indicators, a different analysis. But no matter what you're trading, you know the trend is up. I don't care if you're trading a 1 minute, a 144 tick, a 5 range chart. It doesn't matter. It's going to show you that the trend on this market is long. Yet they're still taking counter trend trades. And one of the things they're doing is they're taking divergent signals. And everybody caught short in this move up is going to get run over. Finally, someone's going to call a top. And as far as I'm concerned, it's just luck, because there is no mathematical way of determining a top. But as price moves further and further off mean, and the mean price here is the 50, when it comes back, it will snap back to mean price. So if you do catch a counter trend trade, which is what all these traders are trying to do, they're trying to catch that snapback. But you're going to lose 5 trades before you catch the right one. And the risk to reward here is going to kill you. I mean, you're going to get really, really, you're going to get taken to the woodshed, as they say. The only way to trade a market in today's environment, where institutions and banks control really 60 to 75, and in some cases 80% of the total volume crossed in the market on any given day, is to trade in the direction of the trend that they create. Now my thesis is that a multi-time frame trend direction can only occur in a situation where big banks or institutions are driving the market. Remember that as a closed system, every market has an inherent desire to trade and chop. If you just leave it alone and there's nothing going on in here, and there's nothing doing but small money, us, the small commercial traders, the market's going to have no background, and the market is just going to chop right here. There's no institutional money involved. The inherent properties of a closed system take control, and the market is just going to move in random, chaotic fashion. And that is when we want to stand down. Now, there may be a great move that takes place, but we trade, whoops, it's the wrong one. We trade probabilities, and the probability of getting a winner during this period of time is exceedingly low. So when there's no multi-time frame direction, no multi-time frame alignment, it's because there's no big money involved. So let the commercial traders just chop this market, and what they're doing is they're chopping it right around mean, which is almost what they always do. They can't get it too far to the downside away from mean, and they can't get it too far to the upside off the mean. The only entities that have the power to push the market like this are the banks and the big institutions. And that's when we want to be in the trade. And we don't want to counter trend trade it. We want to trend trade right behind them and use tools that point us in the direction and let us know when they get involved. So now we know about the multi-time frame alignment and trend. We know the multi-time frame alignment and trend of the correlative markets. And it's important to know about momentum. Momentum is also a very powerful force that moves price. And the only oscillator that is geared or created to look for the direction that price is moving on a momentum assessment is the Laguerre oscillator, which is the one that we use. Now, I have the formula on a slide, and I'm not going to show it, but it's got multiple ways of tweaking the formula, whereas the other oscillators do not. There's only one number you can change on the oscillator, and that's the length of the look back period that it does off the average high and the average low of a move. Standard, it's 14. It's a 14 candle look back. If you want it to be a 12 or a 10, you can go into the formula and modify. The Laguerre has multiple ways of modifying the speed of the line and the stability of the line. And so what we've done is we've optimized the Laguerre. Now remember, I personally, and it's the thesis of this company, that no indicator that assesses data from the trading chart has any value at all. So this line is looking at the direction of the Laguerre on the higher time frames. It's looking at the 15 and the 45 minute, and they're aligned to the upside. And you can see it really pushes the market up. Now, remember what momentum is. It's price acceleration. As price it's not speed, it's acceleration. So if price is moving up at a constant speed, momentum is flat. But if price is accelerating up, then momentum rises. Like a race car going around the track. It's going around at 100 miles an hour. Momentum is constant. If it's going to 100 to 110 to 120 to 130 miles an hour, then momentum rises. So it's important to look at price acceleration. Now, every oscillator is bounded. It can be pressed up to 100 or pressed down to 0, and it can't go any lower. And when this green line occurs, it means that the oscillator on the 2 higher time frames is pressed above 80 and stuck above 80. And for all we know, it could be stuck at 100 on the 2 higher time frames. And we have to trade in the direction of price acceleration or momentum. So we've got our background color, we've got our quants, and we've got our long-term Laguerre oscillator telling us on our 2 higher time frames, momentum is accelerating or price is accelerating to the upside on this move. So that's a little bit of a weaker independent analysis, but still an extremely important one. If this was red, you would not take this trade. If this was yellow, you'd have to step back a little bit and be concerned. Now, this is the only indicator in which an assessment off your trading chart does make a difference. And here's the Laguerre analysis off your trading chart. And all you want it to do is to be moving in the direction of the long term. And you see, here's the Laguerre analysis of your chart. So when you get green, 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 multi-time frame Laguerre, 2 higher time frames green, Laguerre on your trading chart green, you're in business and you've got yourself the lowest potential risk with the highest potential reward trade that you can get. And you'll notice, like right here, price retraces and it pushes. So the Laguerre is heading away from you. So you can't take this trade, but you leverage the move to support. And the Laguerre on your trading chart is going to turn. So you're going to look to get into the trade long again, right about here, where both the long-term Laguerre's lock green, your Laguerre on the trading chart's lock green, the quant's lock green, the chart's green, and obviously you have a smaller move because you got into the trade later. The key, though, is everything aligned appropriately, and you're taking a trade that's going to make you money. This one's not going to be a huge move, but let me tell you, you get enough 7, 8, 9, 10 pip trades, you're going to wind up making good money. The key to being a successful day trader and successful swing trader is not getting winners, it's avoiding losers. And that's the way you're going to make money. And when you trade with the multi-time frame trend of your instrument and with its correlative markets and with the multi-time frame assessment of momentum or price acceleration, you're likely going to get yourself a great trade. Now you have to trade off support. You just can't jump into the trade, which is why, and this goes to our trading rules and our methodology, you'd have to wait for a pullback to support and then a potential entry again right off support, which would be here. And that's going to get you your trade. Because just remember, as part of our trading methodology, you can never prevent crazy counter trend traders from coming in and pulling price back to support. Even no indicator can prevent that. No indicator can determine when there's going to be a price retracement to support. So you're going to have to wait for price to retrace and take it off support in the direction that the background, the quant, the Laguerres, and everything is telling you. When the 50's long, so when everything's aligned to the upside, that's when you're going to get your best trades. Now, here's pink background, but look at the Laguerre on your trading chart. It's up. So you can't trade this short. You don't have everything confluent. In fact, as soon as you get that pink background and the quant and the long term, your price on your trading, the Laguerre on your trading chart is heading up. No trade. Here, as soon as you come back to support, look at the Laguerre on your trading chart. It's heading down. Now, when it moves up right here, now I don't know when this is, you can enter here and you're going to get a very small winner. The point is, you have to wait for everything to align in your direction. I mean, this is the nitty-gritty of trading. And I'm showing you these smaller trades because I don't want to just pop up JPEGs that show you 40 tick, 25 tick, 30 tick winners. You're going to have to deal with smaller winners and trades that are a little bit tougher. You have to have patience to trade. But you're not going to be caught in the wrong direction. Again, this is a really choppy market here. And what you're looking for here, you see, you've got your chart here, but it's intermittently popping above the 20 line, which makes it very difficult to trade right here. And then right here, it just heads straight up. It's very difficult to take this short. What you want is this line to come down and lock short. And that's your great short. And here's your short. If you just wait, these are the trades you're going to get. Now you have to wait for the long-term Laguerre to turn red. And look at your chart Laguerre. It's locked short. And just the important thing to remember is all the colors of all the indicators are independent of price on your trading chart. They don't know what price on your trading chart is doing. So price is falling. So the indicators are red, not because price is falling. Price is falling because the indicators are red. So on this trade, you really could take it anywhere in this case, but you need to wait until that long-term Laguerre turns red, right here. And you want to get as close to support as possible. And down you go. Now, depending upon your risk tolerance, this may take you out on this retracement back to resistance. And then you're going to have to wait to get back in. And the only place to get back in is going to be here. So it's either going to be two winners, one from here to here, and one from here to here. Or if you have a lot of risk, you're willing to let that last lot run, you can get the whole move. It's really based on your risk tolerance. Now, this is really a choppy market, very choppy, but you see the Laguerre's heading up. You have no trade. And then when it rolls to the downside right here, you have a multi-time frame alignment. This is a hard trade to take. I don't like it because it's not coming right off resistance. And I just let it go. I mean, you've got the alignment, you've got the trade, and you've got a winner. But it's a really difficult trade. And you can see the Laguerre on your trading chart is heading up. And I'm not sugarcoating this for you. I'm showing you the chart live. I don't want you to think that every single trade is going to be candy. But this is what you look for right here. Here's another one. Now your long-term Laguerre turns red right here, but you really need to take the trade off resistance. So let price move laterally, and there's your perfect entry. And all it takes is a little bit of screen time and down. Now, when you hit a pivot, you take the trade out. And I'm going to talk about the pivots in a minute. So right here, let's see if we've got a trade here. We just don't, just can't take this trade. So I think, you get the idea. If you trade very conservatively and take your price off support or resistance, you're going to miss some winners, but you shouldn't care about that, because what you're going to be able to do is sidestep. Here's a nice trade, right, very close to support with everything aligned, and you get a really nice winner. Now it's going to retrace back to support, but you're just not going to be able to get back in this trade because here you've got a pivot. You can't trade into it. So listen, we got the same thing. You've got to move up right here, but you don't have the long-term Laguerre. Here's where the long-term Laguerre kicks in, right here. Now you're going to take this trade, and you're going to have to eat a very large retracement. Then price is going to come up and go sideways. And simply because of the way the trade evolved, you may wind up with a small loser here, even though you got this big, huge move up. And I'll just show you one other instrument. Oh, let me just talk about the pivots really quickly. And then I'll show you one other instrument, and then I'll take any questions that you have. And then I want to show you the scanner. Let me put up one other. I mean, I'll show you any one you want. Let me go to, my voice is clearing a little bit too. This morning, I sounded like I was, we'll look at the euro pound. I don't know how often that's traded, but we'll look at it anyway. Now there's nothing here. The chart Laguerre is heading up, and it's heading down, and there's just really no trade here. Here, remember, you want to trade off resistance. And if you do trade off resistance here, you have a problem because you're trading right into support of that pivot. You can't trade it. Then you have this pivot. Then you have this pivot. Oops. Hang on for 1 sec. Okay. That's just my son. And this is the kind of move you look for. And this is what you just wait for. So if you take a tiny loser or a few tiny winners, no problem, because eventually you're going to hit this trade. So your goal is just to avoid taking any kind of significant loser. Again, it's all based upon your risk tolerance as to where you're going to take the trade out. I mean, we would talk about that in a master class that I would give you if you came aboard. But if you weathered this pullback, you could get this whole move to the downside. But you can see the predisposition of price, how on pink background, it almost always moves to the downside because that multi-time frame alignment on the higher time frames almost always push it down. And when the correlative markets are with the trade, price isn't going to go down like this line does because you have those wacky counter trend traders. But remember, you're going to use them to your advantage because when you do get into the trade, you're going to run them over, stop them out, and they're going to help press the trade in the direction that you want to trade. So they serve a purpose. We've got to avoid them on a retracement. That's why we have to take the trade off resistance, or in other words, let the trade retrace or consolidate to resistance and then trade off of it. I'm gonna look at one more, and then I'll talk about the pivots. See, here's a small move up and the only way you're gonna get this trade, it's, actually you don't have one. Look at the multi-time frame league here. It's yellow here. You're not gonna trade it all throughout here. And then as soon as the multi-time frame goes green, your chart gear falls. So you just don't really have that perfect alignment of both momentum assessments in the direction that you want. And here's the area where you just don't even go near the market. And here's another great long move. Be very hard to take a loser here. And if you don't get in the trade right off the bat, and you can't, trading into resistance here, trading into resistance here, here's your entry. You're going to get caught in a retracement right back, but you're not going to lose this trade. And then the trade's going to go up. Depending upon your risk management, you could potentially take the trade all the way up to here. That's a very risky move. But if you stay in the green, you're gonna have the trade off right about here. But you're gonna make money. That's the key. If you make money off of 80% or 90% of your trades, you're gonna be a happy camper. I would be. Here it is again. Now you don't have the long-term gear, so you can't trade it yet. And then you have a pivot, so you can't trade. So here's what happens if you just take this trade here. Price swings right around, comes back to resistance. That's the entry. Up you go. You're out at the pivot because you hit resistance. You can't take this because you hit resistance. And you're stuck on these different levels of resistance. There's nothing you can do about it. So I'm going to talk just really briefly about the pivot indicator. Most pivot indicators create pivots wrong. What they do is they create the pivot off the wick high or the wick low. But if you look at the books on Japanese candlestick dogma, wicks should be created off the candle body low or a candle body high. And if you see this pivot, it's right here. It's off this candle body. And every pivot is created off a candle body. Right here. Doesn't care about the wick. Now, in some cases, the difference between the candle body and the wick is huge. So where the pivot is placed is very important. And we can find an instance of that, I'm sure, right here. Most pivot indicators would place the pivot here because it's easy for them to create the coding for that kind of pivot. It's harder to create the coding for that kind of pivot. But that's the pivot. This is really where all the buyers are sitting. And when price comes down to challenge it right here, it gets rejected. Now it's broken here, but it's a very dangerous place to trade into. So either we don't trade into it, or if we're in a trade, we're going to close our trade when we move up into a pivot or down into a pivot. Now, the other thing is that most pivot indicators also will signify that they're broken when only one pip, in this particular case, it would be a pip, breaches the pivot. Like that would be a broken pivot right here. But also, it's harder to do it right. And the right way to do it is a pivot is only broken, and I'll show you. A good example of the pivot break. He is only broken here when 2/3 of a candle body closes above it or below it. See, this pivot is still tracing, even though 1/3 of the candle closed above it. The pivot indicator algorithm still sees that 2/3 of the candle body is below it and knows this pivot is still intact. But this pivot, the entire candle body closed above the pivot. So now the sellers in this pivot are officially kaput. They've been stopped out and they are gone. So the pivot indicator really has to be respected. You just can't trade into it. And if you do, it's going to cause you grief. Now, every now and then, if you're up a lot of money already and you're just sitting with one lot or two lots, and your stop is well above your entry price, and you're really cooking with gas on the trade, and you're coming up to a pivot, and you don't have a lot to lose because you're already up so much, you can then let it try to let it roll and see maybe if price won't break the pivot. But in every other circumstance, the best thing to do is to clear the trade out before it hits the pivot. And trust me, you're going to make a lot more money, because in most cases, the pivots, if you look right here, in most cases, the pivot's going to reject price. And the biggest problem is we never know when it's not. So here's where the pivot's created. And you can see price drops, then comes right back up to it and gets rejected and goes all the way back to mean. So if you tried to trade right back into it, you would have taken a loser. But if you traded here on this break, you got a winner. Now we don't have an entry here, but in just looking at trading a pivot methodology, that would be your trade and that would be your winner. This is still iffy. So you don't know for sure that you're going to break the pivot. Here's your free and clear trade right there. Now let me just bring up the trade analyzer really quickly. Oh, here it is. I got it over here. Now the market's sort of dead, but and I don't know why it's reading NA. It's probably because I don't have a lot of these pairs formatted, but this is going to tell you when you have an area on your chart that looks like this: green background, green quant, green Laguiers, red background, red quant, red Laguiers. It's going to give you your very low risk areas to trade. It's not an auto trader. It's not an entry tool. It's simply a heads up that in this particular space, the likelihood of getting a trade is there. And if you get a pullback to support on a long trade, you're in. If you get a pullback to resistance on a short trade, you're in. So you can watch as many Forex markets as you want. Now we're trading a 5-minute, so you watch the 5-minute column. If you're trading a 15-minute, you're going to watch the 15-minute column. If you're trading a 4-hour, you can watch the 4-hour. And this is totally configurable. I mean, you can change this. And let me see if I can figure out how to do it. It's really easy to do. Go to columns and just go down to, see right here, instrument, 5 minutes. You can change this to, let's say we want to trade a 150 tick. You just hit OK. And give it a second to reconfigure. Oh, it's not doing anything. Let me try it again. Five minutes still sitting there. Data series. Now maybe because price is dead and not moving. I don't know. But it should go to a 150 tick. And I'm trying to see price based on last, which is correct. Days to load is 2, which is good. I'm sorry. Here's what I'm doing wrong here. I just got advice from them. The label is what you have to change manually. for some reason, I can't get into it. Here we go. Oh my God. It just dropped my Ninja Trader. Well, I'm going to reload it. Hang on a second. It'll only take a second for NT8 to load. Sorry about that. It's all going to come back in about 1 sec. And I don't know why it didn't load or it dropped. I mean, because we use it every day. Keith uses it every day in his Forex trading. But I want to bring up the charts because what I'm going to do is I'm going to open up to questions, and you may have a question about an indicator or an entry or a Forex pair, and I want to have the Ninja open when I do that. And while we're waiting, I'll just show you the offer that we have for you. It's right here. It's the Forex. It's the whole Forex trading system. Now it's $13.99. It's a lifetime license. You get free upgrades. It's normally $29.99. That's what listed on our website. We upgrade it all the time, and all the upgrades are free. The first 5 orders are going to get the market analyzer, which I was just playing around with, which just dropped my Ninja Trader, which again, I cannot tell you why that happened, but it did. And it's a very, very powerful tool for helping you get great entries if you want to trade a whole host of different markets. So let me I'm still waiting for Ninja 8 to come back. It's always in a webinar when something happens. No, I'm not hitting the right thing here. I know what I've got to do. I'm sorry. It's NT8, I think is what I got to do. All right, hang on 1 second. All right, I'm gonna turn the screenshot off, and I'm just gonna open it myself. Hang on 1 sec. Okay, it's opening. And let me move it back to the screen share. And it's opening quick. You'll have to take my word for it, but the trade analyzer works really, really well. And you can configure it for any time frame, anything that you want. We have it 5-minute, 15-minute, 4-hour, daily, but you can configure it for any times you like. All the charts are coming up. I'm just waiting for the Forex chart to come up. We're good to go. There it is. Okay. All right. Now what I'm going to do now is I'm just going to answer questions and see if you have any questions. Hang on 1 sec. Let me pop it. Okay. Hey guys, how you doing? No, I know. I got it. We got it. I got it. I know. Okay, hold on. Hang on. Okay, you got it. Yes, you'll get a recording. Larry, the best exit strategy is something that I would have to talk to you personally about because remember, I don't know how many lots you're trading. I don't know your account size. I don't really know exactly what your goals are. I mean, I don't know whether to format a very conservative automatic trade management strategy for you or one where you take significant risk. That's going to be something that you need to tell us. We're going to offer you a pre-configured, automated trade management strategy based on what you trade. I mean, you may not want to trade a 5 minute. Maybe you want to trade a 2 minute, or maybe you want to trade a range. So we'll format that for you based upon your risk tolerance. And again, you may want to trade one lot, or you may want to trade 20 lots. So the best exit strategy is going to be based upon what your goals are, what your account size is, and and um, and how many lots you're trading. That's okay, Larry. Yes, we'll be emailing you all the costs and everything, George. Could you analyze? Okay. I think I already kind of did that, Anand, but why don't I just do it right here? Here's the way you analyze taking a trade, and this is the way I do it. I mean, it's the same analysis that you take on futures, and it's really this simple. You look for an entry where you have green, green, green across the board. It's very important that the chart gear is in your direction. You just wait for price to drip. Remember, the one thing that you can nothing can predict is retracement, because there are always these counter trend traders who are going to want to push this price in the opposite direction. So you've got yourself a perfect trade and you want to take it right off the support. Now you're in here, one pip above, or you're the best you can get after the close of the candle. Now you don't get a big move here because you're going to take it right off here. But that's the logic. And you just do that over and over again. Here, same thing. You wait for price. Now you can take the trade here. It's coming right off the support. I like this trade better because you've got it moving sideways. But what you do is you have a pivot, so you can't trade it. And never worry about an entry you can't take because of a pivot. Let the trade go. Part of being a successful trader is never worrying about a trade. It's just not configured for you to take. Same thing here. You cannot take that short. You don't have the pivot break. And once it breaks, you're way off of resistance. And you got to be concerned about retracement and getting stopped out. So here's a great trade. It moves sideways right into resistance. And you're red across the board. It hits the pivot. You can close it. If you want that one lot that you want to let run, you can let it run. So, that's up to you. That's discretionary. I mean, formally, I would say close the trade at support. But if you're up nice money and everything's out, but maybe one lot, and you want to take a shot on it breaking the pivot, hang on to it. Tighten the stop. Only give it a little bit of play. And if it breaks, you got a big winner. But you see how it moves right to resistance. Now, if you took it anywhere in here, you wouldn't get stopped out. But you run a risk of a big retracement. Just take it right off of resistance. And you could take it right off resistance here if you weren't in. And you still get about the same amount of profit. That's really all. You just wait for those trades. Like right here, there's just no great configuration. Here's the great configuration. Right here. Right off resistance. But you don't have your chart gear. On this candle, it's heading up. So you can't take it. So who cares? Remember, your goal is to avoid losers. If there's one trade that you want to take, but the chart gear is just not set up for you, let it go. Don't accrue risk and don't have FOMO, fear of missing out. Here's a trade you wish we could get into, but it doesn't retrace. And you can't just jump into this trade in the middle because you can always get hit with a retracement, get stopped out, and then it continues down. So you just have to wait for your trade. Now this market already is way oversold. You're not going to look for a move down. It's come down a long way. Now you can trade a BISC background. I would need to talk to you, give you more information about it. But this trade right here, right off of resistance on this candle, is really a beautiful entry and a really nice move down. This is also a powerful downtrend. Not as powerful as pink, but powerful. So that's really all you're looking for on a long move. And here's your perfect example. You can't chase the trade up, and look what happens. Counter trend traders push it right back to support. You've got everything. You're in. Now, if you close it right here, you got yourself a nice trade. If you stayed in and let it retrace, you got this trade. But if you took it off here, you're in again, right here. The trade goes sideways. And actually, you could take any one of these candles. They're all sitting right at support. And none of them are going to stop you out. You're going to get this trade long, get this trade long, get this trade long. Well, you're not going to take it here because this candle's below the 15. But none of these trades should stop you out. And up you go. Remember, on a 5-minute, see here you've got pivot issues. And so you just let it go. I mean, that's really the methodology. It's not hard. Just don't chase price. You just don't chase price. That's and I'll show you one more example. And I personally like to trade very, very tight. And here's a really, really great trade. Now, I'm not going to trade it here, but I would trade it here, right here. And you get the nice move up. You've got the chart gear stoking up. You know price is accelerating, even though it's moving sideways on your chart, and the gear is assessing price on your trading chart. The formula for the gear is telling you that internally price is picking up momentum as price moves sideways here. That's a great thing to watch for. Sideways movement in price, upward movement of the gear on your trading chart. That tells you that price is almost always going to break to the upside. If you're in here, no harm. If you're in here, better. Either one of them is going to give you a very nice winner because you're taking it right off support. The only time you're going to take a loser is if counter trend traders are successful and actually breaking support really hard. Now this is just no trade. So I think you get the idea. It's just not hard. You just have to be conservative. And with a little chart time, you're going to really be able to pick it up. On this move down, look at this trade. Now, if you don't take that trade short, you got to keep your day job. If, again, you can close the trade at support, or if you're up enough and you feel like, listen, you can't have a gut feeling about a pivot. It's really based on if you're up a significant amount of money and you can tighten your stop and you want to try to let this trade run, it's going to run all the way to the downside. So it's a really, really nice trade. If you took it here, it would be a little too premature because you want it really tight to resistance, but it wouldn't have hurt you. It just would have given you an up candle that didn't stop you out, and then you would have gotten a down candle that swept to the downside. And you just want to stay fairly tight to the 50. Because remember that price always has the desire to retrace back to mean. So as you move off the 50, that's where price is going to get a little bit overextended. So if you get a 40 pip move to the downside, you're not going to chase it farther down. I mean, it's just a matter of being reasonable, honestly. And again, with a little chart time, it's really, really easy. Now, this is just not a trade. You don't have anything here. And here's a trade you could take. But I wouldn't have taken it. It's a break of a pivot, but you really want a retracement back to support and a move up. Those are your, I'm telling you, those are your bread and butter trades. Because they very rarely lose. Now, this one just is a nice trade. We don't have the long-term gear, so it isn't a trade. This is your great trade right here. You really have a consolidative pattern here. And I'm going to teach you all this. And the break of consolidation to the short side. Well, you have the pivot problem. So I take it back. You're not going to trade into the pivot. Then you've got another pivot. And then when you break this pivot, you really want price to retrace back to resistance and then head down. I'm really doing sort of a master trading tutorial, but I want you to understand how the system works. Here's a terrific trade right here. Now here, the pivot is not completely broken, but I would take the risk on this trade because I just like this configuration so much. I will rarely take a trade without a pivot break. This just misses by a tick or two. It's coming right off the 15. It's retraced sideways. Everything's green and everything is locked up. And price is not going down. Up it goes. Here's another trade. It's not a huge trade. It's a retracement. It's a sideways movement right off the 15. Everything's locked and down you go. Big trade? No. Who cares? It's a winner. And the potential for this trade is to go 25 pips, but it doesn't. So you'll take 6 or 7 or 8. All that matters is that you continually accrue money on every low risk entry you can. And you're never going to get caught in the wrong direction. If you've got the quant, dual gears, background bias, 15 and 50 red, and you take a trade off resistance to the downside, you're going to get 85 to 90% winners. Same thing with green. Green, 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 50 above the 15, 15 above the 50, everything's locked, retracement back to support, and then the move up. Those are very low risk, high reward trades. I can't think of any configuration in trading that's going to give you the better chance for a winner than a trade like that. And these are 5-minute bars. So you're in this trade for 5, 10, 15 minutes. It's not a short trade, but it evolves beautifully. And it gives you plenty of time you can either trail the trade if you want on a trailer. You could bring your stop to break even when you take out your first lot, your first 2 lots, whatever you want to do. That's something we would have to discuss with you. But that's really the methodology. Let price trade off of resistance to the downside, support to the upside, in the direction when everything's green and everything's red. And those are your bread and butter trades. There's no reason to extend your risk any further, because why take a risky trade? If you have the analyzer, you're going to get this setup. You can watch. It's good to watch 12 Forex pairs. You're going to get this setup over and over and over again. So don't look for anything else. You have one setup and that's it. And just keep taking it. And it's going to work. And you can see why. It's not a magic trade. There's no magic entry signal. And there's no magic dot. You're trading in the direction of a multi-time frame trend among multiple markets and in the direction of multi-time frame momentum or price acceleration. It's that simple. So there's no hidden There's nothing hidden here. And you can see why. It'd be very unlikely off resistance for price to go like that. Now, once in a blue moon, it will. I mean, if we could get 100% winners, we'd all be millionaires. And every now and then, you're going to get a broad price reversal. Institutional money is going to reverse direction, but it's very rare and highly unlikely. And that's all we can do. Trade an entry for it to lose when a situation arises that's very rare and very unlikely. There'll be a replay, Carol. Len, I like to trade the Forex really at the European Open. Right now, it's 3 o'clock in the morning on the East Coast. I mean, that's the best time. But let me tell you, you can trade it 5 o'clock in the morning, Eastern, 6, 7 o'clock in the morning. The only thing that listen, and their traders will trade it at 7, 8, 9 o'clock in the morning Eastern as well. But just remember, once the world markets open and the New York Stock Exchange opens, it starts to pull volume off of the Forex. But until the NYSE opens, and it's still until gold opens at 9 a.m., until the crude pit, which doesn't exist anymore, but like electronic trading picks up at 9 a.m., essentially world markets only have the Forex to trade. I mean, how many people are trading, the Hang Seng or trading the Indian Stock Exchange? I just get it. I'm blocking it, but we formatted traders on it, and I just can't remember the name of it. I mean, there's just not many traders on it. They either trade the American or they trade the Forex, and those are the best times to trade. I think at 3 a.m., from 3 to 6 in the morning, you're going to get killer trades. And I had a Forex trading room open, and we made really good money on it. But this was about a year and a half ago. But I was trading both the Forex and futures. So I was getting up at 3 o'clock in the morning. I can't remember if it was 2 o'clock in the morning because Eastern Standard Time. And then I was going back to sleep and then getting up again to trade the Forex markets. And after 6 months, I basically was ready to go into a mental institution. I mean, I just was getting sleep deprived and too tired. And I had to close the Forex room, which was really sad for me because I had a lot of traders in it, but I couldn't manage it physically. But for me, I would like to trade it when it's the only game in town. And you really get some nice moves on really good volume. Brian, they do work, but in order to trade a Unirenko, you're going to have to create a very big Unirenko candle. I mean, a big one. So it absolutely does work, but I found that a 5-minute is a great time frame. To me, it's easier to trade. It's easier to configure. And this consolidative pattern laterally is a really, really good pattern. Lateral into resistance, lateral into support. And you really don't you get those on Unirenko, but on the Forex markets, see, it's right. See how price moves laterally here? Let me show it to you. I mean, if you look at the actual price, it really doesn't change much. Right inside this channel. It's going up, it's coming down, then finally it bangs up against resistance. Now you can't trade it here because you don't have your long-term gear. Here, you got everything. And you're really trading out of a consolidative pattern with lateral movement right to resistance. It hits resistance and kaboom. Now you're going to have decent money at the pivot. It's up to you whether you want to close the trade, which is absolutely, totally a good move, or let one lot run and try to go for a bigger profit target. There's no right or wrong here. You understand the risk. You know how to manage the trade. You're going to tighten your stop so you don't get, if you get a big bounce, you're not going to lose a lot of money. And you already have to lock in a significant amount of profit in order to do it. But that's the kind of move. Now, I just want to look at one thing really quickly here. If I do this, Sergio's going to kill me. But hold on a second. I don't even know if it'll work. No, we don't have it here. Hold on a sec. We might have it here. Now, if we have it here, it's not going to be, we don't have it yet. Eventually, what we're going to do, and I'll have Sergio do it, it'll probably take him a few days, is we have a consolidation indicator, which we just don't have configured yet here. And we don't have it configured yet anywhere. We haven't given it out. That consolidation indicator, which is what we'll eventually put on, is going to show you this. Every time there's sideways movement and a channel is created, the indicator is going to show you. And trading out of that offer resistance is like, this is a great trade short here. It's a little scary to take because the market's already made a big lurch down, but it's coming right off of resistance. And you do get money off of it. And this one you're going to have is a little risky because you're going to have to say, I got to pivot here. Am I going to settle for a little bit of profit or am I going to let it run? But you see the setups. They're very clear cut. They really are. And you really don't want that 15 yellow. You want the 15 red and the 50 red. Those are your best trades. And you're looking to get into the lowest potential, the lowest risk potential trade there is. So in the course of a week, the number of trades you take is not really relevant. It's the number of winners you take versus the number of losers. If you take 15 trades and get 14 winners, you made an enormous amount of money. If you've got 3 times as many winners and a huge number of losers, you're down. So you just look for the perfect setups and let everything else go. And let me tell you, I'm giving you sort of my philosophy. You're going to have winning trades that you miss, but who cares about them? If they're not low risk entries, let them go. Wait for the market to come to you. If you can eliminate fear of missing out, FOMO, and just take your lowest trades with triple greens or 2 greens in them and the Laguerre moving in the direction you want, or dual reds or triple reds and the Laguerre moving down in the direction you want, on a retracement back to resistance and then down, you're going to have a very low risk trade. It's going to work for you over and over again. You got it. Rinse and repeat. It's right here. You have to go in and you'll see the input you have to put in is 15. If you put in 15, the indicator automatically knows the higher time frame is 45. And it knows that your trading chart is 5. So you have to put these inputs in. That's the one thing about this chart that really is really powerful. You can reformat it for any time frame that you like. If you want to format it for ticks, you can just move this to ticks. To range, you can format it for range. So you have to set the long-term Laguerre. You have to set the quant speed at 15 minutes. You have to set the background bias, which I think I'm going to have to bring up here. At 15 minutes. And if you change the speed that you're trading, let's say you want to trade at 2 minutes. This is going to go to 6 minutes. Put in a 6. Hit OK. You put in a 6. Hit OK. And what's the other one? I'm missing one here. The quant. Put in a 6. Hit OK. Now you change your chart speed to 2 minutes. and you're perfectly configured for a 2. So you can configure the chart for whatever time frame that you like. And this is perfectly formatted for a 2-minute. And you can see you're getting more potential entries, but they're going to be smaller in distance than the 5-minute. And here you get a huge amount of chop with no background bias. So it's up to you, and you can configure the chart. I mean, here's your great move up. Unfortunately, you've got multiple areas of resistance here, but it's a terrific trade. Now, the only other thing I want to just check is to make sure the pivot indicator is set right. The pivot indicator should be set at 150, and it is. So it's set correct. So these pivots are really valid pivots. And you just can't, there's nothing you can do about them. But that's simply a 2-minute if you want to trade it, David. Anand, it only works on NinjaTrader 7 and 8. Unfortunately, I'm sorry. If you want, though, you can trade a demo version of Ninja. The only thing you're going to have to do is you're going to have to buy the data feed. You know, I don't know how much it costs. I don't think it's that expensive, but you can take your trades on MT4, but you're going to have to use the platform is free. You can download a demo version for free and keep it forever, but you will have to pay for a Forex data feed, and you'd have to buy it off Kinetic. And I use Kinetic as a backup data feed, and I have everything on a backup. So I pay 200 plus a month for Kinetic, but I have everything on there. I have gold, so I have the COMEX. I have crude, so I have the NYMEX. I have the Forex on there, and I have I have the Russell, which is an extra data feed, and I have all the index equities. So the whole total is 250, and I can't remember out of that how much the Forex markets are. I mean, that's your only option, Anand. And it's not a bad one, I'll tell you. Okay, Mark. Come with the system. Yes, Carol, I just showed you. You can easily trade range bars here. In fact, if you go right up here and you go to range, and let's just dial in an 8 range. Now, all you have to do, you get 12 templates, by the way. And if there's a pair that we don't know, that we haven't made, we'll make it for you. Go to range here, and you go to the higher fib number. The higher fib number from 8 is 13. You put in 13 there on the range. On the long-term Laguerre, you go to range, and you put in 13. The system knows that the higher time frame is 21, which is the next higher fib number. And you go there. And then background bias, which I have to open. Do the same thing. Go to range, go to 13, and there's your chart. There's your range chart. And you can see that you got yourself a nice entry. And this entry, when you get the consolidation indicator, is really going to give you another set of configurable trades. This one is a super trade. This is a long period of consolidation, all the way into resistance, right here, and then down. It's a little tough because your chart like here peaks here, and the next candle it drops. So it doesn't quite make it, but that's what you're looking for. And range is really quite good to trade. I really like range, quite frankly. I traded range bars for a long time. I just really fell in love with the 4-minute, 5-minute. But let's see here. Let's look for another trade. Remember, this is a pretty fast chart compared to a 5-minute. So we're going to have to look a little bit further for a winner. But when we get one, I think it's going to be a nice trade. I mean, this is a small trade, but it's very low risk right here and down. Now remember, just because it only went 4 or 5 pips doesn't make it a bad trade. This thing could have gone 25 pips. So if you take a low risk entry, you can never tell for sure how far it's going to go. This is a nice trade. You only made a small amount of money, but it was a really good entry. Here's a pullback to support. Now you don't have the Chartlet gear. The Chartlet gear flattens. So you just don't have a trade. Like I said, you just wait. And here's your, no, that's no good. No pullback. And here's your trade. There's your consolidative pattern. Your retracement right back to resistance. There's your trade. It's a beautiful trade. And down you go. How far you want to ride it down all depends on your risk management. If this stopped you out, you could get right back in here. The problem, this pivot's broken. So you go right down again because you retrace right back to resistance. If that wick just about touches the 15, you got a nice trade. So you just have to wait for them to appear. If you trade 12 templates, you're going to get lots of entries. And on an 8 range, you're not going to get as big a move as on a 5-minute, but you're also going to take a lot less risk. So you can easily trade range, Carol, and you can. And I've already formatted 12 templates, and if I load them, I'll show you them right here. Aussie yen, Aussie USD, euro pound, euro yen, euro dollar, euro pound CAD, pound yen, pound New Zealand, pound. They're already in here, and we will send those to you in the package. And if by chance you trade a pair that I just didn't get, we'll make it for you. Here's the pound yen, here's the pound Canadian. So all those templates you're going to get. Now they're all set on a 5-minute, but you see how easy it is to change it. I mean, you just go into those 3 things, change the inputs, and it's super easy. And Sergio will always help you. I mean, he's going to format the thing and configure it for you from start to finish. So you don't need to worry about that. Okay, I'm glad, Brian. And remember, although this dropped, I don't know why, this is going to be operational and it works great on Forex. And on NTA, it's a killer. You would just change this to an 8 range column. You'd change the label, and you'd wait for that green color to appear on the 8, and you'd open that market up. It's not giving you an entry. It's just telling you got all those greens, and all you're going to look for is a move on a long move, a trade off support, a short move, a trade off resistance, and you may not get one, but it's a lot better than standing and watching 2 pairs move through this clear area where any trade you take is very likely to be a loser. So it saves you a lot of time and a lot of boredom moving through a zone like that where you shouldn't trade, and the likelihood of getting a winner is exceedingly low. So that's it, everyone. I really appreciate all of you coming in and giving me your time. This is the platform. If you trade it conservatively, I think you'll be very successful. We're gonna add the consolidation indicator within a week or so. We already have it done. It's on my futures charts, and it's really a great indicator. It will show you the channels, and when the channel moves into that 15, to the upside, you got to trade. To the downside, you got a great trade. As long as you're red, 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 and green, green, green. It's going to really help you see where to take the best trade. And the nice thing about it is it comes with an alert and an actual entry tool. So it may signal you're long here, or you're long here, or it may give you no signal at all. In which case it's telling you maybe you shouldn't trade that consolidative pattern. Because I'll tell you, this consolidative pattern right here doesn't evolve so nicely. and not 100% of them will. And I want you to think they will. Now the problem, you see here, what hurts this is your long-term, is your chart gear is heading down. So you can't take this trade, and you see how you're gonna get saved on taking tons of losers on that chart gear. When that chart gear is heading down, and it's heading down here, you have no long trade. I was going to say this was a difficult pattern, but when I look down at the chart gear, it prevents you from taking an entry. So you're safe. Okay, everybody, have a really, really great afternoon. Hope to see you on board. I think this will be a very successful platform for you. And if you like to trade Forex, it's going to give you great entries. I'm more than happy to work with you. I'm always here to answer questions, and Sergio will do the complete configuration for you. And you will get that scanner if you're one of the first 5. So have a really, really wonderful day, evening, and a great weekend. Take care, everybody. Bye-bye.